So thank you, Mac, for coming along. We really appreciate having you. So Mac is our mortgage expert, and he's gonna kindly walk us through the mortgage. But first, would you mind, Mike, to introduce yourself to the listeners?
Yeah, absolutely. Thank you for having me here, Karim. For everyone listening, my name is Mac Phillips. I'm actually a mortgage professional here in the GTA, and I work for a company called Dominion Lending Centers. If anyone's not aware, it's actually Canada's largest national mortgage brokerage. We actually assist families coast to coast. With about 3.5 to 4,000 individually owned brokerages. So my office is here in central Mississauga, and I've been having a fantastic time, helping clients, through the pandemic, as well as really understanding what their options are now post.
Yeah, Mac, you've been doing a great job for all the clients. Thank you very much for everything you're doing for everyone. How about we start by letting the listeners know what are the steps needed to get a mortgage, especially for those that is their first time applying for a mortgage. What the steps that they should expect?
Absolutely. So before we dive into, step one, step two, as far as the pre-approval process is concerned, I think every family who's looking to purchase a home, whether it's going to be their first home or whether it's an investment property, we need to understand, and I think this would be a good opportunity for those applicants to really have an in-depth discussion before coming to a mortgage broker. And it's the question that I'm looking for you to understand in depth is why. What are we looking to achieve by this property purchase? Is this going to be a short-term investment? Is this a long-term investment? Are we looking to turn this into a rental property? Are we looking to gain some equity to position into another property, in 3 to 5 years? What is your ultimate goal? Because myself as a mortgage professional, we're really not, rate takers or order takers, if you will. We're not going to be in most instances accepting your request and then just providing a solution to that, because we wouldn't be doing you any justice if we did. Our responsibilities is to understand what the needs and dynamic of each family is and to provide a personalized action plan to help you reach those goals. So before you want to connect with me, I need to understand what you're looking to achieve, and then I could formulate a plan on how to best get you and your family members there. So with respects to an actual overall mortgage pre-approval, the process is actually very, very brisk. And in today's climate, 100% virtual. So you never need to leave the confines and the warmth of your living room, and we can do the entire pre-approval process right up until you're ready to go out the door and begin making offers on homes with my colleague here. So my pre-approval process is really just 3 steps. Okay. The first step is getting on what's called a discovery conversation with that family. And we're going to be diving into the particulars, understanding your situation, what you're looking to achieve, and then get a good understanding of your ability to borrow. Part of that first conversation, while I'm looking for opportunities to push this forward, I'm certainly looking as well for red flags. What are some things that may come up down the road that may prevent us from making this a seamless experience for you? And I want to provide all of that insight for you from day one. I find if there's ever any challenge that's incurred or anything that needs to be surmounted down the road, I want to make sure that these family members or any applicant have a clear understanding of what the expectations are early on, so that nothing catches you off guard. So at the end of that discovery conversation, I would then be sending you over a list of documents. Those list of documents are going to be income and property driven if you have other properties. And then I look to formulate those and get back to you typically within about 48 business hours. What I'm doing with those documents is essentially doing the same underwriting that your bank or that the lender that we present your file or application to is going to be doing. So it's my responsibility to root out all of the things that they're going to be looking for so that we understand your application in detail and can present it to the lender on your behalf. My job is to make you look as good as possible and make sure that everything that's going to be known or that is required by the lender is understood and then presented. Once I've done my full underwriting and I have an understanding of your pre-approval, next steps and action items, I then want to call a strategy meeting with that family, and I want to present different possibilities to you, different lender solutions, and give you 4 or 5 different options to pick from. Essentially like a buffet of mortgages. At the end of this first conversation, or that second conversation rather, you'll have a clear understanding of lender solutions, overall carrying costs, next steps, cash needed to close the home, as well as any action items that you need to take for us to bridge any gap in that pre-approval. And what I mean by that is if we need to work towards getting all the down payment in one account, or if we need to work towards fixing some credit items as an example, I'll then present that to you and your family members so you understand exactly what needs to be done in preparation for us heading out to purchase a home. So if at the end of that strategy session, you're on board and you have a clear understanding of everything and that makes sense, I then draft an official pre-approval letter. And I present that to my realtor partner, Karim, as well as the applicant. So everyone understands, what the budget is. And it's, down to the dollar. I've actually heard other mortgage brokers say, hey, your budget is 950 to 980 as an example. Well, that doesn't give you any specificity around your budget. You need to know down to the dollar what your budget is. And that's how I present it to my families each and every time. So really, really brisk. And that's really the process that I take families through.
I really appreciate that, Mac. As a matter of fact, when you were talking, that brought back memories. I remember the first time I purchased a home before becoming a real estate agent, and I faced a lot of questions. I wish I have met you then, Mac. I mean, just formulating it in 3 simple steps makes huge sense. But I remember something that took place at that time. I was afraid to approach a mortgage broker because I thought, I don't want to commit. And I'm not sure I'm ready to buy it. And on the other hand, am I wasting anybody's time? So what are your comments towards that concern?
Absolutely. So purchasing a home, for the majority of us, is going to be the biggest purchase that you're ever going to make in your life. So I think before you can even say that you're ready or even decide in your own preparedness, I think it would be always a good opportunity to connect with a mortgage professional. I've spoken to many clients that were well qualified and thought they weren't, or ones that thought they were well qualified and weren't. And I think you want to give you a good opportunity to, present that with a family and put you on an action plan if needed, or give you the confidence to be able to proceed even in the current market. I think a lot of families or the expectation of a lot of buyers is to get to a certain purchase price and say, they say, what, I want to buy a house for 900. Well, that's great that you want to do that, but do you know what that costs you per month? Does that mortgage or that principal mortgage amount coincide with your ability to take on new loans? So rather than presenting a high level overall purchase price for someone like yourself who was a bit hesitant, I would then say to you, Kareem, what's your monthly budget? Where are you comfortable monthly? And reverse engineer a purchase price from that rather than allowing you to overextend yourself and take on more than you can chew.
Should I be concerned that I might be wasting your time at that point?
Oh, okay. So no, it's never a waste of my time to build a relationship with a family. I've had clients where we've put them on 6, 12 months, or even 18-month plans. So you would never know what action items that you would want to take unless you have that initial conversation. So it's never a waste of my time. And I can give you feedback within 10 or 15 minutes whether or not you can proceed now or whether there are additional steps or hurdles that we need to overcome. So 15 minutes out of my day is never a waste of time to put additional value with my clients, even my realtor partners as well.
Thank you, Max. So what we got from that first, that you can never assess yourself personally because you never know. You might be eligible while you think you're not, or vice versa. So reaching out to a mortgage professional is really important. Secondly, you're never wasting the mortgage professional time because that's what they are doing for a living. And again, it's not going to take them more than 15 minutes. So please don't be hesitant to do that. Now, this leads me to another question, Mac. I know we're going to talk further about that. I understand that it's a case by case, the tips that you might give, but can you just give us couple of 2 general tips for people that are trying to build towards getting a mortgage? What generally should they do? Just 2 general tips.
Sure. So the biggest tip, or the first tip rather, that I find catches a lot of families off guard is the impact that liabilities or loan payments, for example, how that impacts your overall mortgage qualification. I've spoken to families and they're like, no, I don't have any debts, but I do have a car payment. And that car payment, let's say it's $650. When I tell them how that car payment impacts overall ability to borrow, it's a bit of a shock and hard to digest for many. So the first thing that I would just say and how you can interpret that is for every $400 loan payment you have, or credit card payment or student loan, reduces your overall pre-approval by about $100,000 per $400 being paid to loans. So the first thing that I would say is try to reduce your debt carry as much as possible, and or do not take on any new debt carry at all until your home is closed. And when I say closed, I don't mean documents signed, down payment provided to the bank or the lender, or even the lawyer's office. I mean, wait until keys are in your hand, you're sitting in your living room on that new couch that you did or didn't buy. That's when you want to go out the door and start looking for new financing. Anything that you would apply for prior to that could have a huge impact on your ability to borrow. Okay? And the other thing is that you don't need 20% down to buy a home. I think a lot of people have been preconditioned to that 20% down payment because they don't want to pay the mortgage insurance. And certainly, while the mortgage insurance could be anywhere between 2.5% to 4% of the mortgage amount, a huge investment. However, it's keeping a lot of people on the wayside. And they're ending up, allowing the market to pass them by, and they end up taking a smaller home on, or even no home at all. Up until just recently, the market was going up between 12 and 15% a year. On average, how fast can you save versus the market appreciation? So, what I would recommend for a lot of people is as soon as you have the ability to buy, get into the market. I'm sure you've heard that old saying, the best time to buy real estate was yesterday. And that still holds true even in today's market. If you're looking for a fast flip or an investor and you're looking to get equity out really, really soon, this may not be the absolute best time to get in if you're looking for that year or less investment. But if you're a family looking to stay in the home for a number of years, there is no wrong time to get into the market.
Thank you, Mac, for those two valuable tips. Guys, these
Yep.
are your first two valuable tips. For further more tips, you have to reach out to Mac because it's a case-by-case thing. Mac, back to the three steps that you mentioned. So after those three steps, we're going to end up with a pre-approval letter. Can you please explain to us what's a pre-approval letter, what it is, what it's not, what are the, am I bound to get into, after I get as a buyer, after I get a pre-approval letter, does that mean that I need to buy a house or could I just walk away from it? Thank you for that. Please just has some highlights about what is a pre-approval letter.
Sure. So a pre-approval is going to be very different than if you were to visit your branch, for example, versus working with a mortgage professional. And the reason why I say that is because more often than not, the branches are not able to do a full underwriting of your file. So this means that you've presented all of your documents, you even potentially presented a home that you want to purchase, and then do a full review of all of your items and then present you with a budget. More often than not, at the branch, what they do is they ask you key questions that you need to have a clear understanding of and provide right answers to, and they provide you with a tentative rate hold based off of that conversation. We're all human, we do make mistakes, and more often than not, there could be information either falsely presented, inaccurately, or opportunities where we're pre-approving or presenting budgets that do not coincide with market conditions. So the pre-approvals that I provide, any family that I work with, means that I've invested my time doing a full document fulfillment and review for that family so that I have a clear understanding of what your budget is, as well as your ability to borrow. By presenting that pre-approval to you, not only does it affirm what your budget is, but it will also assist you when you're going to make an offer on a home, that you can present that to the seller's agents to give them 100% confidence that, hey, I've been pre-approved and here it is in writing. Okay. At the pre-approval process stage as well, as what we're also going to be looking to do is hold a rate or do what's called a rate hold. This gives families up to 120 days to be able to shop the market and feel confident that their budget and their monthly carrying costs are not going to increase between the time of the pre-approval until closing. That's especially important right now in the current rate market, as in the last 6 months, rates have come up drastically. So what we're finding is that a lot of families want to take advantage of that rate hold so that they're not having to be pre-approved and take advantage of rates that as they are today. So you may hear some terminology around I've been pre-qualified. These are the kind of things that you can actually do yourself on like a mortgage broker app, but that's not going to hold true when we're actually looking at the details of your application. So I would always recommend contact a mortgage professional, get an actual in writing pre-approval so you have confidence in your numbers and understand exactly what that rate hold looks like. Lastly, no, you are not obligated to proceed with anything. The pre-approval is just there to give you some goodwill and to help you sleep at night knowing that everything has been secured. But if you were not to find a home within that 4-month period, we would just then secure another rate for you and allow you another 120-day period to begin shopping. As long as you know that within that 120 days you need to buy the home and have the home close to be able to keep that same rate, then you can take advantage of the same pre-approval that I've given you.
Lovely. So basically, what I got from that, Mac, that first of all, the pre-approval is going to provide you the most accurate numbers on your eligibility and what you can afford. And it's going to be more accurate than whatever you're going to hear verbally. And second, you're not committed. Rather, it's an option for you. You could act on it or just let it die and nothing's going to affect you. Am I correct on those two assumptions?
Yes, absolutely. And just one additional comment to that is that I've actually had quite a few families, to your point of the obligation to move forward, then say, you know what, I may or may not buy a home. I don't necessarily have the time right now to invest to get you all of those documents. And or I have a hesitation around my credit being pulled. I hear that quite often. So just to set the record straight around what's available to you, but also how the credit pull may or may not impact your overall credit score. So once upon a time, you're 100% correct in thinking that having your credit pulled more than once would have a negative impact on your score. But what Equifax and some of the big companies have actually done recently is they've actually done what's called grouping of credit pulls. So if you're someone who's going out and you're shopping for credit, let's say you are at a credit card company, a car dealership, and looking for a mortgage, it looks like now you're shopping for new credit, and then your credit score is going to have, an ultimate dip. But if you're going from, let's say, the bank to a mortgage broker, and it's seen as two financial institutions that fall under the same heading, they're going to group those pulls together, and it's going to impact your score less. So don't think that anybody who's looking to buy that you should be hesitant in getting a pre-approval because it's going to damage your credit. It's just not the case. But secondly, we actually do have solutions now that are purpose-built for those families who would prefer not to have the credit pulled or don't have the time for documents. And what I mean by that is that we can actually do a rate hold without needing credit and without needing documents up front. So if you're a family that's like, you know what, I want to buy in Feb, but now isn't a good time to get involved, we can still hold your rate until 120 days from now to give you time to, essentially be more comfortable with the option, or even to find a home that you enjoy before submitting documents. That's also an option for you as well.
Thank you, Raj. I think a lot of people didn't know about that option, so thanks for sharing that with us.
Yep.
Guys, as you know, Mac graciously approved and accept that they're going to attend with us more than one of these episodes. We're going to talk about other topics such as renewal tips, what you want to do if you're an investor, what you want to do, other options if you cannot find a down payment or you do not qualify, and maybe if you're a medical professional, what you should do, and investment. Sources of lending or financing for investment. We're going to talk about all of these topics for the time being. If you have any mortgage questions related, please reach out to Mac. I'm going to include all the contact details in the biography down below here. If you have any real estate questions, please feel free to reach out to me. And meanwhile, if there are any topics or questions that you wanted me to discuss with Mac on the coming episodes, please let me know. Mac, thank you very much. It was a great pleasure seeing you, and looking forward to our next call. Thank you.
Looking forward to it as well. Thank you for having me.